just take it from here. Okay, so first and foremost, let's start with Bitcoin. Obviously, we're going to look over Bitcoin, and this is the perspective I'm giving all of you. Okay, many people are going to be losing their minds. They're going to be like, "Oh my God, we're so bearish." But if you take a very, very just a logical approach to this, you will realize we've still in the same range we've been in since we broke into here in 2024 November. Okay, no major damage has been done to this chart. Right, don't let anyone fool you. There has been no major damage done to this chart. We are still ranging. That's all it is. We're still ranging. If you think that literally the whole price action right now can be described by two things. Okay, two things. Let me just turn this off once. First and foremost, this chop here is the result of your 2024 seller zone. You came up, you created your 2024 seller zone, right? 12 months. And after you did that, after the seller zone was created, now this is just follow through, right? So seller zone was created here as soon as this closed. So everything that's been going on so far, follow through. Now there is the argument to be made that okay, after the seller zone was created, we've swept the highs and now we've lost the mid. But now for this to be more substantial, I want to see some sort of breakdown, and then if you then go up and you know treat this as resistance again, then okay, you swept the highs and then you confirm this to be resistance. This is where you take the short. You'd have plenty of warning before you actually got your macro flush, in my opinion. Okay, unless they decide to be absolute dicks about it and just send it straight down. But you can't predict things like that. No one can predict things like that, right? Which I don't think is going to happen. So that's reason number one. And of course, this is paired up with the fact that this was, there was ABCDs over here. If I turn my group 7 on, right? And why was this a reason to begin with? Anyway, we had the ABCD 2.24. We had the ABCD 2.618. And you can see the 2.24 was once again gone and confirmed as resistance before we had this drop, right? So again, there was a trigger for a short if one was looking and one was paying attention at this time. 2 a.m. in the morning, I'm never trading, right? 99% of the time, I'm not trading at this time, so I wasn't even looking at the charts. I missed this, but it's the exact same level I projected as soon as we realized we had a 382, right? Nothing's changed. This level's been here for months now, absolute months. We've been given this as projection now. Some like midway through last year, as soon as we had the breakout, I was saying, okay, we have ABCDs coming up now. So ABCDs and buy seller zones, right? And the other reason is this very, very simple fib speed fan. Why? Because if you take a look, right, how have I drawn this speed fan? This is this speed fan right here, your last consolidation zone, your high to low, right? If I was to go ahead and draw that speed fan on, there you go. That's this speed fan right over here. Okay, what did we do? If I was to go ahead over here, create a copy, and then I was to call this range once, then all we did, we broke out of that range. Right, we broke out of this speed fan range. And remember, with fibs, negative and positive fib extensions, remember, it's not just with horizontal fibs. Okay, you can do those with diagonals as well. So all we've been doing is, if you done, okay, you broke off the one for your consolidation range over here for like 8 months, 9 months, is significant, right? Your last significant consolidation range, your fib speed fan, you broke out of the 100%. Therefore, you're going to put the 100 to 200% extension on. And if you do that and you simply leave just the golden pockets plus the liquidity rates of the golden pockets of this, right? You'll notice all we've done on Bitcoin is gone and chopped in between the golden pockets plus liquidity rates of the fib speed fan. And even now, that's all we're doing. Okay, it's not like you've gone and turned one of these into resistance. It's nothing like that, right? Golden pockets plus liquidity rates, you've just been chopping between that. So until something like this were to happen, basically, I wouldn't be like, oh, calling tops or anything like this. Right, because this, if you're looking at this in terms of diagonals, if you're looking at this in terms of market structure, again, I just don't see like any serious damage that's been done to the chart. Yeah, I just don't see it. Yes, more recently you've swept liquidity, you've confirmed the mid there to be resistance on a lower time frame. You've confirmed the AB equals CD to be resistance on a lower time frame. If you get a higher time frame follow through to that, a break of structure, right? You take out the lows, you start putting lower highs and lower lows in, right? Then you'd be like, okay, well, maybe there's something to this. Right, but right now I just don't see that. Right, you've got local lower highs and lower lows on the daily. If you were to look at the weekly, you're gonna struggle very hard to give me any sort of a bearish thesis. Where is the lower high, lower lows? Where is your confirmed weekly bearish divergence? For me, that is not a significant weekly bearish divergence. Right? Okay, your wick went higher, but your candle body close is lower. Right? You want higher highs and lower lows to have class A bearish divergence. You don't have that either. Right? So I just don't see. I think this is just chop. That's what it is, right? Chop's normal.
Mhm.
After inaugurations, you normally get chop. I don't care how low we go, right? Of course, the only thing I care about is I don't care how low we flush. The only thing I care about is do we maintain market structure after the flush? If we go and then confirm a break of trend and then we confirm lower highs, following the break of market structure, that is when you have to be worried because then you've got confirmation that okay, I think the top is in. We just don't have that yet. So anyone calling tops now is just being very premature in my opinion. It's the same people calling top since all the way, literally here. It's the same thing, right? I don't see enough argument yet for this to be a top. So just quickly on why I don't think like on the higher time frame there's nothing to be worried about. Now you look at Bitcoin dominance, you look at altcoin dominance, so on and so forth, and of course alts are gonna get wrecked. But we've been saying it's a Bitcoin market, right? I've already said Bitcoin and ETH are my two biggest bags, so this alt drop isn't really affecting me, right? Um, but that being said, if you're more old heavy, like I completely understand this is going to be very nasty, right? Depending on what olds you've been in, you've taken some serious hits over the last 2 weeks. But on the better perspective, on the grand scheme of things, especially if you're considering Bitcoin, it's all good. I don't think the top is in. I don't. So that's my opinion on this. And another way to look at it, right? If you go to the just the fib speed resistance fans, so we're gonna go to the FSR for this, right? Let's go to V1 first. If you take a look at this 50 resistance fan on the macro, all of you should be aware how I drew this, right? This one is the one from this low to this high. Look where we are. What are we doing? We are chopping in between the 618 and the 66. The golden pocket is what you're chopping in between. Still, right? That's what you're chopping in between. Okay, yes, you use the 618 as resistance, but the 66 is still support. And eventually, I do expect this to get tapped, right? But the question is, do you tap that after you go higher and hit the higher targets, or do you tap that first and then go higher, or do you actually give us a very slow quarter one, right? Perhaps you literally start doing this for the next few weeks, right? Same, just tight range consolidation, and then you let the trend catch up with you over time before going up. It could be any of those scenarios. We don't know yet. Right, but even in terms of higher time frame trend now, look, what was one support and then flip to resistance. For now, we're chopping in between that. There is no decisiveness. There is no one side showing strength over the other. Anytime we go to the top, sellers take control. Anytime we get to the bottom, buyers take control. That's what it's been. Right, one side hasn't decisively claimed the zone yet. So there's that. And then add on to that, you've also got your previous completed wave structure, which is this, your macro wave structure, which is now from this low to the last all-time highs. If we do that, then the 0.5 is what you're chopping in between right now, right? So you basically turn both of those on. You see we have a very important zone here in terms of diagonals as well that you need to hold. If you start closing below this, then I think this time around maybe you do get that breakdown, right? And then what was one support in the past that has been used as resistance gets reclaimed as support before we go higher. But that's only going to be the case, of course, if we lose this diagonal zone right over here. Right now, this is your key level over time. And for me, these are more significant than any horizontal levels ever could be. Right, so this is very significant. You can see this has been the chop range before. We're still within that. So even if you came down to here, realistically, you're fine because you've done that before, right? And then this time you'd be looking for that flip of support and then into higher. So multiple different perspectives there on BTC, but basically all to say, yes, I understand the bearishness, right? In terms of people being bearish because their port's been liquidated, because everyone's been like 99% into alts, and not even your strong alts at that, right? Trading meme coins on chain and just random vaporware. But if you're looking at this from a very holistic perspective, especially BTC, which BTC is king right now, I don't see like any arguments yet for market tops. Okay, could we go lower? Yes. We could obviously go lower, we could go higher, who knows. But in terms of market structure, which is the important thing right now, I don't see any serious damage done to the chart. Okay, so that's BTC. Let's move on to Ethereum real quick. ETH right over here. Now Ethereum still within that falling wedge, and this is why I said do not long Ethereum over here, right? Last time we streamed I was saying do not long Ethereum here until you get confirmation of a breakout and retest, right? Look, the retest completely failed, right? Look, even the breakout failed, to be honest. We were looking at this on like the 4 hours and stuff. You had one successful retest from a high volume sell candle, right? Not enough buying pressure down here at the bottom, and then after that you just slid down. What have you done? You've lost historical range mid for now, but we also said that that's nothing out of the ordinary, because now let's see where we have this. Yeah, we were looking at this right over here. What was this? This was your 618 on the retracement. We were saying there's a possible 1.618 that could happen. You've just about front ran the 1.618 for now. You very much front ran it actually. Maybe even on exchanges you might have actually gone and hit that 1.618, right? So maybe one more drive down to actually properly hit that 1.618, right there. So let me just go ahead and actually mark that 1.618 down, something like that. There we go. And I'm going to go ahead and I'm going to use this. Yeah, might as well just use that for now. Settings, paste that in, and this is your AB equals CD 1.618. We need this to hold, right? So we hope this holds. But this, one sec. Yeah, let me just do that. But there is your target right now for Ethereum, right? Just basically rate that liquidity, but then maintain that structure for now. That is what I'm hoping, right? Of course we might front run it. We need further candles and more structure to be more confident in what's going to happen. The daily hasn't even closed yet, but the question is, do they give us this structure, right? Or do they induce FOMO to the downside here? Do they induce even more market shorts? Do they break the structure to also make people who are actually believing in this structure lose hope, and then do they send it up, right? That's something we discussed last stream as well. Could very well be a possibility. So just something to consider, right? Just something to consider. But don't be surprised if we do visit 2282 at some point, if the dump carries on and there's the tariff wars increase, right, for whatever reason. Because we know at the end of the day, if historical price range 3 is lost, it's not uncommon to actually head down to the next key inflection area at some point in the future, right? So let's see what happens. For now, of course, that's just a daily breakdown. By the time the weekly closes, actually no, that's not happening, but let's say next week or within the next couple of weeks, we might just get a bullish engulfing candle, who knows, right? But for now, I'm not thinking about this level down over here. I'm thinking about, do we maintain that smiley face structure that we've been discussing, right? Now, do we have any harmonics here on Ethereum? Let's take a look at that. So that's your falling wedge. Let me just mark it as such. Let's do that. What's this? That is something. Delete that. Delete that as well. Don't need that anymore. This is okay. Yeah, that's the box we drew. We've basically gone to the bottom of that box. As long as we hold this, the structure is confirmed. We can raid lower as long as the higher time frame candle body closes respect the closer of this. I think the structure is intact and the smiley face plays through in the future. But if we take a look at 12-month buy seller zones, we have 2024 micro read buy zone mid just below that 1.618 confluence as well, which makes me think there could be one more drive lower. All these wave structures still intact? Yes, they are, so we can forget about those, and we can forget about that as well. Okay, so in terms of harmonics, right, let's see, what do we have? So firstly, let's look at internal structure. In terms of internal harmonics, we have X A 576, so I'm just going to go with the 0.5 in this case, just over there. $886 could be deeper if we get the 886. Is there anything cleaner than that? Let me hide this once. Let's see, do we have anything cleaner than that? Let's go to the 4 hours and take a look. Not that I see, not there. I always prefer macro structures anyway, so let's just look at macro structures for now. What about something like this? That is a 3.5. No, that's not good either. Let's take a look. One sec, let me just eyeball this and see, is there any good M/W spots that's actually available over here? So let me see. Not of the eyeball. I think it's I think the ABCD is probably the best way to go with this one here, to be honest. Yeah, that's fine. We'll just go with the ABCD for now then. I don't want to put down really deep levels in case what about this? One sec. Okay, 492. Okay, this is a reason for why we could potentially get that key inflection area down there, right? Macro bats. That's if, of course, if you confirm this B point, right? Basically, if you now turn this area plus the mid into resistance, I think we lose structure. The smiley face is out of the question, and we go a bit deeper. Maybe complete this structure and then go back up for Ethereum. Basically, just expand the compression stage, the consolidation range, but only worry about this, like I said, if you turn that B point into resistance, right? Or you go there straight. But if you do get that pullback, only if you start seeing B being treated as resistance, historical price range 3 being treated as resistance, only then do you pay more attention to this 886 here. But for now, this ABCD, as long as this holds, structure's intact on Ethereum, right? And if you do get a sweep of this, you could probably have open a position size here, to be honest, based on the actual box we drew last stream, right here. But if you get a sweep of this, you can just 20, 40, 40, right? You don't have to go all in at once. Remember, trend is to the downside on the daily, right? So just until that trend shifts, don't be fully allocated. But you can just keep sizing up until you break trend and you flip this into support or whatever, and then it doesn't matter where your average is, anywhere within this mid section, even anywhere in this area, right? If you're targeting $5,000 plus in new highs, you'll just be happy that you weren't liquidated in this zone. That's the big thing. But yeah, that's Ethereum, right? So basically, we have very key areas. We could get one more drive lower to actually rate that 1.618, right? Get that. Take out the lows, in case anyone longed here, make sure, sweep them once and then go higher perhaps. But there, 618, 1.618, that projection we put down last stream, pretty much got hit. We just got front run for now. That's Ethereum, right? So Ethereum, I'm like I said, my average is very low $2,000, right? I started bidding this since the bear, so I've got a nice size bag of this. Even if we go and visit this key inflection area, unless we actually lose it, I'm safe, right? So I'm not fussed whatsoever about what happens over here in this particular area. So that's Ethereum. Right, let's take a look. Just rapid fire. ETH BTC losing that box that we were talking about, right? So again, if you guys remember what I was saying we've got two key zones, right? This is the first zone, this is the second zone. If you lose this zone and you confirm this zone to be resistance, then we're looking at this for obvious reasons, right? 12-month buyer seller zones. We have this order block completely filled, not held for now. So we have the standard deviation 1 point of control from the low to the high, right? We've got the standard deviation 1 high to low value area low over here as well. We've got the 18, 19, 12-month buy seller zone low. We've got the 20, 20, 12-month seller zone low, and of course we've got the Macrobat 886 and the Macroshark 886. A very, very nice PRZ in this particular area. You've got confluence from Fibs, you've got confluence from harmonics, you've got confluence from just support resistance in terms of buyers versus sellers. You've got confluence from volume profiles, so i.e. volume data, right? Very, very confluential area. I seriously hope we get this area. I would absolutely love to get this area. So that's ETH against BTC. I don't need to go over that too much. I've already built this chart out with you guys on stream, right? So let's take a look at some of these. AVAX. Now this is the one. This is the one I put in chat as well, asking you guys to share your charts with me, and I would give feedback on it, right? So might as well do that feedback now, and I'll just post a link for the people who wanted comparisons to this. So let's take this from basics. So what was our thesis for entering AVAX over here in September? Right, what was the thesis? If you guys remember, the thesis for that was, where is it? Right here. Right, so let me turn off this, and this for now. Yeah, let's leave macro on for now. And let's turn this off as well. Right, yeah, let's turn that off, and let's turn the ABCD off as well for now. There we go. Right, this was the thesis, and this. The thesis was, we had M shape, right? If you look at AVAX, XABCD, right? You have a completed BAT. This is a macro harmonic. This is from 2020 through to 2022. 2-year harmonic structure here. Right, this built over 2 days. Not 2 days. Sorry, 2 years. Very significant. You have your completed M shape, right? That's very harmonic in nature. You have a completed M shape, and then that leads to a period of consolidation right here. Right, so wave structure, start of wave structure here. Harmonic completed over here. You have a consolidation period right over here between 2022 and 2023, right? A year plus 4 months, right? 4 to 5 months, a year plus 4 to 5 months of consolidation around the bat. Note, you never lost the bat with like, let's say, serious follow through, right? You never lost the bat with serious follow through. This is more just, you're just chopping around that bat level. You go up, you come down, you go up, you come down. What happens in 2023? You then break out, and then you reclaim that 886, the actual PRZ level of the bats, right? You reclaim that as support. Not only is that the 886, that is also your macro value area high, right? Sorry, macro point of control. That's the most traded price for AVAX of the entire range. So very, very crucial area, right? You flip that into support. You go on your first run. After you go on your first run, you hit your terminal 1 zone, right? Again, terminal 1, if you're following Mr. Scott Carney's theories by the book, it's a 382, right? Of course, I've got my own little system for this. You guys know this. So I go from the 3-4 to the 4-on-4, right? Golden pocket plus liquidity rate for me. I prefer working with zones to give myself a bit of breathing room. You hit the terminal 1 zone, and then you had your pullback. What's this? This is the type 2 return, right? The type 2 return, you got a successful type 2 retest off that 886, and this is what I went over. This was what was happening back in September. This is what we went over. Right? You got your successful type 2 return, you got your successful type 2 retest, and then that is what we based our bids off in September. Right over here. That gave you that move up, right? And then after that move up, again, you came up, you hit resistance, and then you started to come down. You've not even hit terminal 1 yet. So this for me is still a ongoing impulse in correlation with respect to that actual type 2. Okay, so here's your type 2 return. This for me is still a part of the type 2. For all you know, you could go down, make a double bottom, and then go up. You could put a high low in here and then go up, right? For me, this is still a part of the type 2. Right, so that is your macro, right? That is how you position yourself on the macro first, right? That is what we now build our entire thesis around. So what do we have now that we didn't have back then, right? We also have now the fact that, okay, since that C came in, right? Even if that C doesn't get violated eventually, we do have a harmonic that could take us back towards D. Now this harmonic I'm only going to take more seriously if we actually go and flip that B point into support, right? That's going to trigger something called a BAM. Again, I talked about this already. But that would basically increase the chances, increase the likelihood of AVAX going up towards these higher targets, right? But that is now, of course, this is a very, very bullish scenario. We might not get here this cycle. This might take a couple cycles to get to, right? Or this might not play out whatsoever, right? Before we get here, we could do something like this and then make a new low on AVAX. Who knows, right? Maybe AVAX comes down and we rate that low again before we go higher. We don't know yet, right? That's way too far off in the future without enough confirmation of, B being support, price action supporting us for us to even say, yeah, for certainty, this D point is going to hit. For now, I'm just projecting it in case, this C point doesn't get rated in the future. This is something that could potentially develop. Right, so let's turn this off as well for now. We don't need that, and let me turn this off so it's not confusing. So this is your macro stance, right? This is your macro stance, and you can turn on your other fixed range volume profiles. I've got standard deviation 2 right over here, which lines up with the top of T2, right? So should we ever go and flip standard deviation 1 value area high into support, that's going to increase our chances of course, going up towards the next target, which is going to be the standard deviation 2 value area high. Right, so that's why I've got those marked down as the macro. But now let's take a look at it more locally, right? So we looked at the macro, that's all great. Let's look at it more locally. We've talked about these potential harmonic patterns in play, right? There's another one here as well that's a bit more, let's say, conservative compared to that target taking us all the way back up towards D point. That is this 786 right over here in the form of a potential Gartley, right? But the things to consider here are this, right? So this is what I was looking at on AVAX earlier. So the first thing I saw earlier today was we had a Gartley right here, right? 618, 786, right? You had the 1.618 and the 786 of the Gartley right in this area. Now this could be transitioning to what we call a deep Gartley, right? But I'm not even going to count this as a deep Gartley. I'm going to count this as a bat instead. For now, this PRZ here has been voided, right? This one right over here, because you've gone below on the higher time frame, something like the weekly, not the weekly, let's say something like the 2 weeks, not the 2 weeks, let's say something like the monthly or something. We could very well turn that into support, right? By the time this closed, over the next few days, we could very well do something like this, reclaim this into support and go higher, right? So for now, I'm going to leave that on the screen right over here. Now this 786 is no longer in question. We're going to go down and do this, right? We basically have an 886 here, currently speaking on AVAX. Again, we know if you have an 886, what is the reciprocal ratio? It's the 1.13, right? So now we have a wave structure on AVAX taking us back towards $59 if it bases around this area. That's the important thing, right? If it bases around this area. So we have a potential ABCD right over here. We have this other one if you take the more macro structure as well. So from A, of course we've lost that 707 as well, so this looks more like a 786 now. 776, very close to a 786, right? Again, in case you do decide to go for that 786, it's going to be down there, but I'm just going to ping it here, right? Let's just say if you have the 786 is the 1.272, that's going to be your reciprocal ratio. So if AVAX bases around this area, we've got multiple confluences. You can see multiple different harmonic confluences, i.e. fib confluences, as to why this could be a potential bottom. Deep value, no matter how you look at it, 886s, 786s are now being hit, right? Now, if I turn this Gartley, forget about the Gartley ones, right? We've gone past the Gartley. What we have now is this right here. We also have X, A, B, C, D. You have a bat, right? Look, 886 on the retracement up there. I'm not taking it to the peak, but we SAP'd that peak anyway. So for me, that's 886, right? X, A, B, C, D, you've hit the 886 of the X, A, B, C, D, right? So you've hit the bat. You've got a harmonic structure as well. And of course, you turn the trend lines on. You're at the trend line, right? You're maintaining the trend line now. You can see AVAX is at a very, very significant area here, right? Areas you do not want to lose. Lower time frame loss, I do not care, as long as the higher time frame candle body closure maintains the status quo, right? That's all I care about. So apart from that, what else did you have? If you look at this area on the weekly, you had your weekly fair value gap right here, right? You have your weekly fair value gap, and it wasn't a mitigated fair value gap. I don't know why I've labeled it as a mitigated fair value gap, so let me just go ahead and get rid of that text. One sec. It's mitigated now, but it wasn't mitigated when it actually came down, right? So you created the fair value gap, you never actually filled it until today's tap over here. But that weekly fair value gap you've tapped into, you've also tapped into that weekly order block. You've got a weekly buy seller zone, a load of different areas in here acting as support, right? So this is the reason I was saying AVAX looks to be in a extremely nice area, right? AVAX, I just can't fade this. It's really, really clean. No matter how you look at it, right? If you look at it in terms of harmonics, if you look at it in terms of just buyer seller zones, I can turn the buyer seller zones on, right? You can see 2024 12-month buyer zone mid. You've hit that now, right? Buyer seller zones, very key area. You've hit your support in terms of buyer seller zones. I am in AVAX, okay? This is literally, take it as a call if you will. I am laddering into AVAX again. My original entry was never stopped out, right? But I'm literally recompounding. It was very close to being stopped out break even. I'm recompounding into AVAX here. Okay, I'm not going to go all in yet. I'm going to enter with maybe 40%, right? Leave 60% for the trends and so on and so forth, DCA with. But I'm entering AVAX here, right? Take it as a call for you guys. So I'm going to be laddering in. But I just can't ignore the area that is currently at, right? I can't ignore the area that is currently at. So that is AVAX, and if I decide to close this, I will let you guys know myself. I will let you guys know. But right now I'm not thinking about closing or anything like this. I'm thinking about, okay, I mean, look at this deep value, back to key areas of support. This is where I'd want to pull the trigger, right? So the question is, do we have any ABCDs over here? Looks like you should, but did we look at any? Oh, no, sorry, we did look at ABCDs, didn't we? Did we have an ABCD to the downside? High, low, lower, high. Basically 0.5, so we're looking for a 2.0. Not yet. This is if we get one more flush. I'll be DCing quite nicely down over there for AVAX. Remember, how do I DCA? No blind limit. DCA only if. Set some alerts. If you're going to sleep, then I'd maybe put some bids in your areas with reduced position size for DCA, right? But I just want I want to see buyers coming in to actually quantify that area before I decide to DCA with size, right? So that's what I'm saying. I'm not going to go all in on DCAs unless I see that confirmation, unless I'm in front of the screen looking at order flow. So there we go. There's your 0.5. There's your 2.0 right over there. This is a deep extension level on AVAX to consider. Okay, right there. And again, this wouldn't be out of the question, right? Look, you've got an order block. You just completely fill that order block, and then you'd probably be on a merry way higher. But this right here, extremely valid target for AVAX. Not likely in my opinion if we do defend this area, because we've seen the confluences here, but this is only if we keep going to the downside, right? This is just in case the top isn't in. There's no way, just in case we don't base here. Basically, that's the daily close. Another thing you can do now here is you can give yourself the daily buy zone that was created today. Oh no, that's the weekly close as well. So here's your weekly buy zone. Yeah, do this for any coin you're looking to enter. Put the weekly buy zones down. I'm gonna color it something different so it's very easy to see. Let's color it like purple. There's your weekly buy zone. If you start turning the top, the mid of this into resistance, you can try and look for scalp shorts to the downside to try and take this target. If you don't, and you get pullbacks into this level, but then you see buyers are now stepping in, forget your shorts, okay? That's going to be your entry triggers right there. But that's AVAX, okay? So AVAX looks absolutely beautiful in my opinion. Let me just see, just in case you guys got any questions. Flights in 6 hours. Right. So that's AVAX. Hopefully you guys can see why this is such a pivotal area for AVAX. This is the kind of areas, you don't buy AVAX here. This is the exact same speech I was giving to people back in September when I made that harmonic setup video. I was telling people, look, people aren't going to enter here. They're going to start entering AVAX at 44, and they're going to start asking me when's a good time to enter AVAX once we get towards that T1 zone. That played I like that, because loads of people asked me, okay, where would you enter AVAX when we were up here? I can't tell them anything because my entry is all the way from down here. Right now that you're back here again, people are going to cheat their bags. No one's going to be looking for entries, right? Very few people are actually going to be playing it smart, looking for entries here. That have been sidelined, that have been on their hands, right? Preserving their capital, and this is where you deploy that capital, right? This is where you recompound the profits that you took on that initial move up. And if you lose this zone, you lose structure, just cut, right? Just cut. It's okay. Just cut. Save yourself the headache until structure looks good again. Just re-enter in the future, right? That's what it is. But AVAX looks absolutely beautiful. Okay, it doesn't look beautiful. That's a nasty sell-off. But the area it's at is beautiful, right? So that's AVAX. Let's take a look. Another one, for example, Injective. Let's take a look what this is doing. Right at key inflection area right now, right? This is at key inflection area mid, just below key inflection area mid. $13. You wouldn't be surprised. We need this key inflection area to hold, right? I wouldn't. This is not a bad area to buy spot, right? Start laddering into spot, but it's definitely not an area you're going to be. So maybe if you want to enter right now, especially leverage, wait until either, like I said, draw your weekly buy zones, see what happens at those key levels, or wait until the key inflection area mid is flipped into support and just take it from there, right? Otherwise, Injective, this can't be the only chart that I have, surely. One sec. Hell no, I should have more Injective charts. Where did I do my buy seller zones? Yeah, this one here. You've lost your 2024 and 2021 key level right over here. 2024 12-month buy zone mid, 2021 12-month seller zone mid. You're below that. Below this, if again the weekly buy zone does not provide support this week or whenever, it might be a 15-minute tap, whatever. If you look, depending on what time frame you're looking at, if it doesn't hold a support, then $13 again, key inflection area plus 2024 12-month buy zone low, very possible. Now there's one particular harmonic I've had on Inch for a very long time, thinking, oh, that might take a while, but it doesn't seem that unlikely anymore, to be honest. I don't want to start calling for $6 Inch yet, to be honest, right? This seems a bit diabolical, but I mean, the confluence is there. If you lose $13, make no mistake, I think $6 Inch could be very possible. Okay, and my injected bag has been hit stop loss at break even. Okay, and this is based on the entry I gave in September. Right now, the original 2023 entry, that's obviously still safe, but I've not got much left in that. Of course, this is my moon bag, right? Like until I think, oh yeah, the cycle's over, I'm not going to sell that. But this could very well be possible if and only if we lose this $13 level right over here. Okay, so let me do that. Let's see, do we have any other M shapes? So am I jumping the gun by going straight for that one? So if I go for something another 3 months, for example, see, for me that's not the start of an impulse there. Came down, maybe something from here. one could argue that, you know, you've got to impulse start from over here, something like this. No, it'd have to be a shark. Yeah, something like this perhaps, right? 886 right over here. There. So maybe like a raid into this area, fill some of that fair value gaps and then go up. Could very well be possible. But only think about these levels, like I said, if you actually go ahead and lose this area over here. Okay, if you don't lose that area, then it's what it is. You're just going to chop some more before reclaiming structure and going back up to the upside. What else do we have? Let's take a look. So this, for now, until this low gets raided, these wave structures are still in play. Okay, the two wave structures I'm referring to, of course, are, let's do this bit by bit. First and foremost, actually no, forget about this one. Don't forget about it yet. Hang on. Firstly, this, right? As long as this C is not taken out, we have the 782. But again, I think it'd be nice if this C got taken out, because we could actually get a 786. That'd be nice. So I'm kind of hoping we do kind of, you know, raid these lows, get that 786 or even the 886, right? But for now, I'm going to pin it at the 786. Somewhere around the 786. Okay, so if that 786 did get taken, then we're looking for the 1.272, right? And the 1.272 would take us towards $64 inch. And if you go for the 886, then that's going to be the 1.13. Yeah, basically that. That's if we bounce off, if the 786 is the bottom. If we go deeper and we actually hit that 886, like the other harmonic was showing us, right? We actually go and get that macro shark. Let's say we do actually get the 886. There. That's a big if for now. Structure needs to be lost, right? Before we do that, this area needs to be confirmed to be resistance before we talk about those levels. This is just pure speculation for now, but that could give us a wave structure that builds up towards a 1.13, right? Something like this. $58 inch for a new high, maybe before market tops out. But that's, of course, that's if these lows get taken. If this low holds, and in fact you don't actually go raided, you know, let's say, you know, you bottom out here, whatever, then all of these are still in play for now. If I ever put this down, that's a shark. Okay, never mind, I got confused for a minute. Why did I put this down? Yeah, that's a shark. 5 O's, you know, throwing them, all speculation here, right? Just all speculation. The important thing to note is, of course, two different charts, like I was saying, Injective USDT, and you guys can go ahead and, you know, one thing you can do is put the volume profile on this as well, right? I've not done that yet. I've not put the volume data here. The volume, I guarantee you that's going to give you some very interesting levels. But key inflection area, that is lost, then we know where we're going next, right? 9.87, that's the range mid, and the next key inflection area is between 692 and 488. But if this key inflection area is not lost, then there's no reason looking for $9 or $6, because we know this represents a very important support resistance zone in terms of the range, right? Let's actually go ahead and try to put that volume data down. One sec. Here we go. So let's begin by putting the macro down first. Okay, so this is Binance, so I'm going to take this seriously. Value area high lines up around $9. Again, that's key inflection area confluence right there. Sorry, no, that's historical range mid confluence right there, right? We've got range mid confluence right there. So that's, again, a very good reason as to why if we lose 13, this is the next area to look for. But we're not going to just base it off that. We've looked at the macro. Now let's look at, for this move up, where were the key levels? For this move up, the key levels were, so where's the start of the move? So for me, the start of the move was over here. Two different ways you can do this. Let's try them both ways. Let's try it as the macro low for this current phase, so the macro high first. Right, and then let's go to the daily to make sure we've actually pinned this properly. Oh, I wish it, come on now. Where's the... Oh, Jesus Christ. This is so finicky. This is the one thing I do not like about volume profiles. You know what? I'm just redoing that. One sec. Okay, where's the low? Let's do that manually again. The low is over here. Yep, right over here. This is what started the entire leg up. Let's just do that for now. And the high is, of course, all the way up over there. So we go and we pin it up towards there. That right there is the high. Right, there we go, finicky. But yeah, so for this move up, right, from this low to this high, that was where all your significant volume was. 68% of all traded volume on Binance for Injective USDT took place, right, from that low to this high, between $7.15 and $1.10. Right, so again, that's another reason why $7.30 is such a key area, right? That low $6 to $7 area. So for this entire move up, that's where the volume profile is, right? That's the profile. So let's now take a look at what about the move down then, right? What about the move down? And more importantly, one thing as well, just a quick tip for you is look for that look for the high low that actually gives you the move up, because sometimes this gives it gives completely different results. Because by the time the second lows come in, sometimes what basically, in terms of what market makers do, they've already accumulated. So actually significant volume ends up shooting up, right? And you see this happen a lot. I don't know if this is going to happen here, but it'd be cool if it did. So let's go and pin this over here. So you see what I mean. Even though we didn't move our actual pinpoint by too much, right? We didn't move it at all, in fact. We didn't move it by a lot at all. You see the value area high and the point of control are both changed, right? And that's because majority of the accumulation, like the last serious accumulation leg, always happens obviously towards the lows. That's where the smart money is accumulated, and that's where the volume comes in, right? So you get your some sort of action from the bottom. You come down and you put a higher low in, right? That higher low, by the time the higher low comes in, basically a lot of volume has actually already been accumulated. You can see the difference it's made, right? You've gone from point of control being at $1.64 to all of a sudden the point of control being at $3.78. So the most traded volume is already, like, between that range, it's already gone, right? It's already gone. It's no longer the same. So we've got a zone, basically, again, that's that very important number, $9.57 in this case, down to $7.25, right? So we can see, you know, for these key areas, why there's so much confluence. If we were to lose $13, why these lower levels would be where you'd want to layer into spot again, right? There's some very serious zones in here. But that was for that move up. So next, let's look at, okay, what about that move down then, right? Have we already rejected the point of control? So if we get the volume profile again, there's your high, and your low came in right over here. What have you done? You've gone, you've confirmed, right, for that volume, you've gone up, you've confirmed your value area high to be resistance, you distributed around that value area high level right over here, right? That's where you distributed, and after that distribution, you turn the point of control into resistance as well, right, as confirmed by this and this. You can see anytime you came up towards the point of control, so i.e. the most traded volume during that move down, you couldn't reclaim it into support. That's very significant, right? Because during the sell-off, you're saying, okay, this is where the biggest sell-off happened. So if you want to flip bullish, it makes sense then for buyers to go and recapture that level, but that wasn't the case. It wasn't the case at all, right? And from there, you know, again, down. So for now, you're working with, your best bets is working with buyer seller zones and key inflection areas right now, in my opinion, plus wave structure, right? Because in terms of volume profiles, all the key volume profiles now is basically just below you, right? Straight up just below you. You can see all these ones have been confirmed as resistance. So unless you see something like this, you know, where you go and reclaim this into support, there's nothing else for you to do here really. In fact, you're probably sat, if I was to select this and change it to standard deviation 2, right? You're probably sat right now around You've lost standard deviation 2 as well, and change it to standard deviation 3. Yeah, you literally sat at standard deviation 3 right now. You're at the precipice of, like, you know, Inch needs to hold these kind of levels, right? It needs to hold, needs to start reclaiming these to support, and then you want that to climb higher. Otherwise, like I said, those lower levels look really juicy on Inch. So set some alerts and then watch what kind of price action develops. Again, put your weekly buyer seller zones down, and if you see buyers stepping in here, or even if you see a loss of this and then you see a recapture, that's going to be a trigger to enter longs, right? Lower time frame to higher time frame mindset, I scalp the swing mindset. But if you break down and then, you know, you start getting hourly and 4-hour candles, treating the mid of these and the low and the high, you know, just treating this entire as resistance basically, you'll have, again, a scalp opportunities. Shorts to the downside. Base it around what happened this week and where buyers took action, right? Right there. But yeah, that's injective. At very significant areas right now. At areas you really need to hold. You absolutely need to hold this. Otherwise, like I said, you breach $13, right? That key inflection area slash the 24 12-month buy zone lower. You've got liquidity pockets, you've got structure, you know, volume profiles, wave structures, fibs, everything. The lower confluence lower, and that's that. Solana, let's take a look. What do we have? Huge sell-off. Like I said, this was your next key level, right? We tried to hold it, and then we couldn't hold it. You couldn't hold it, you've lost it. You're now back towards range lows. If you're treating this like a range, you're back towards range lows. Here's your range high, here's a range low. Back towards range. Any sweeps of this and reclaims is you can take a long, a high risk to reward long based off that, right? On the higher time frame, we do have now build up above the breakout of that supply line, but does that even maintain? Does that hold? Right? Do we have wave structure? Let's take a look. We probably do have wave structure here, to be honest. We're already around, so we have a low, high, 0.5 basically. Yeah, there you go. You have a bat. Your 886. Your 886 is around 183, right? So maybe perhaps one more drive down around this area, i.e. the area that starts to, like, you know, represent the range low sort of area around there. Any absorption of sellers, any strength of buyers, right? This is where you take action on Solana, right over here. You don't have to enter here with the mindset that I'm going to ride this to new highs. You don't have to. You can enter this as a trade, TP at a risk to reward that makes sense to you. Make a trade risk free, and then from there you can target your next highs if you're not confident. Multiple ways you can play it down at these levels, okay? But Solana, wave structure wise, you do have a 886 lining up around here. So, you know, if you wanted to take a bet, that sort of area is where you do so, basically, right? There, around the 886 right here. Basically between your 2024 and 2022 12-month key levels, that's where 886 is going to fall. So that's Solana. Very simple. You actually don't need to overcomplicate this at all. Wave structure still intact. 2.0 is at 309, right? So that's Sol. Let's look at Vanry. Absolutely died. Look where it is. Do you know what? I got stopped out on this a break even. I'm going to enter some spot Vanry here. I'm entering with 40%. I will leave 60% for actual sizing up. But look how easy it is to manage your risk here, right? If we actually get high time frame loss of structure, I will cut. But in terms of risk to reward, I just can't ignore where we are. So I'll just enter like 40% or something like this on Vanry, and then if we get a close, actually, do you know what? I'm going to reduce that. I'm going to reduce that to 30% since it is it's 12 something here. I'm about to go to sleep. I'm going to reduce that to 30%. I'm going to leave 70% for DC allocation slash, you know, sizing up on trend shifts. If by the time I wake up tomorrow morning and that 30% has nuked down to 0, I'm okay losing that 30%. I think that's the way I'm going to play it. If I enter 40% now, I'd rather have the safety and a bit more. I think we probably get more time than you think to actually, like, you know, size up. It's not like we're going to go straight back to all-time highs from here. So I think we'll have plenty of time. I got to remind myself this with spot. You have more time than you think. So I'll enter 30% here, leave 70% for sizing up slash DCAs on Vanry. But look at where we are. I don't care if this, like, right now speaking purely from trading perspectives. In terms of risk to reward, if you don't buy here, where else are you gonna buy this, right? That's the question you ask yourself. So yeah, Vanry, I'll bid some. I'll slurp some here on Vanry. We probably get a raid of these lows at some point, probably fill the fair value gap. If you do that, I'll just DCA some. Okay, so the crypto chart has a bit more data, yeah. So if we go lower to these fair value gaps on the weekly, so on and so forth, and buy a step in, I'll DCA some there. Otherwise, I'll add on trend shifts and so forth. Recapture of, weekly order blocks back into support, so on and so forth, right? Mitigated liquidity pockets back into support. But yeah, Vanry, looked at Inch, right? There's so many, right? Aptos, let's take a look. Look at the area we're at, right? On Aptos, just look at it. So if you taken the hard stops on Aptos scalp that I presented to you guys last stream, then you would have been stopped out. But if you guys went for the higher time frame candle body closes strategy instead, you would be deep in the profits for this Aptos short that I gave last stream. I went for the hard stop strategy in this one, right? So I got stopped out of this, and then we went down. It's what it is. My biggest short right now is the Trump short anyway. That's pretty much balancing my port out, so that's all good. But where we are on Aptos right now, if we take a look, the reason I've called this internal bat 886 and internal shark 886 is because that's from here. X, A, B, C, D, a bat and a shark right here. So if you look for the externals, I'm sure I've done this. I don't see why I wouldn't have. Yeah, we can forget about this player now. Delete that. There's no way I wouldn't have done the, yeah, so that's fine. Get out of here. That's fine. Okay, I've not done any of the external. One sec. Let's find some external harmonics. We're below the internals, so here's your external harmonics. Bat first and foremost. A bit lower. Perhaps one more drive down on this as well. As you can see, many also set up like this, right? Perhaps one more drive down, hit the 886, get a raid, and then start carrying on, going lower. So on the external, we have this, and we also have a shark. We know this. There's that to that to that, up to there. And if we go for the shark, it's 1.618 to 2.24 on here. So that 2.24 is probably going to line up with that 886. In fact, that's near enough perfect. So we have a shark and a bat, right? So here, turn both of those on. I would pin those down one after the other. So let me go to the settings of this first. We're looking at around $5 Aptos over here. If we're waiting for this one to hit. Settings, coordinates there. This is your shark. So I'm going to type in shark 0.886. Could you go to the could you go for the 1.13? Sure, but then you've actually extended how much a shark's allowed to on this B2D leg, right? So for now, this is the higher confluence harmonic for me, which is why I'm going with the 886 option. And of course, we also have the bat. So let's go ahead and turn the bat on. So we're looking at $5.57, somewhere around there. Again, we go here, do this, settings, Control V. This is the BAT 0.886. There you go. There, right? So now these are your external harmonics. Here. So, two things. Either you go and sweep your external harmonics, or you get something like this, right? Reclaim, and then you go higher. So you've got two different harmonics you can actually base this off. And not only that, let's say you go and hit your external harmonics first, you don't have to go all in at the external harmonics now, right? So perhaps you can allocate 50 or 60% for price action around this area, and then you could allocate more, like you could have allocation for if this ever gets flipped back into support, and then trend shift back into to an uptrend, so on and so forth. Right, multiple different trigger points for you over here, but we've got these two areas now. So for we could do this, chop around some, and then go up. Right, that's very possible. But all that to say, obviously, in terms of wave structures, we can see Aptos is also now approaching very, very key areas. One has been breached, the other's just below. Right, if that tags, it tags. Areas like this, where your risk reward is good, again, you can enter literally 40% spot, leave 60% for DCAs for any liquidity rates, / if you for trend shifts and for sizing up on if local resistance get flipped to support, so on and so forth. Right, but that right there is Aptos. Two different areas. we can delete this now, because I did that to show you guys why this was important in terms of rejection. Buy zone turn to resistance, right? We can hide that for now. That'll be important in the future. Current macro harmonics. Actually, no, I already had these drawn down. Never mind. I realized I thought I didn't have them drawn down, but I do. Yeah, I had them drawn down. The bat and the shark. Yeah, there. Great. Okay, so I have them drawn down. And 12-month buyer seller zones. We've lost our 2024 12-month buyer zone mid. In terms of 2024 levels, the next one's are 432. I don't think we get that level, personally speaking. Let's not speak too soon, but for now, I don't think we get a sell-off hard into it. If we do, our lucky day, right? Because that's just cheap Aptos for us to try and run it back up once again. But for now, you can draw your key inflection areas as well. You can do volume profiles, right? You can do all of that. This is on Mexi. Perhaps do volume profile on Binance since that's the highest volume. But the wave structure is what I base my entries around for now, and then these 12-month levels, reclaims of that's what I size up on, and then the other size up is going to be strictly for when the trend shifts back to an uptrend, right? You get a confirmation of that. But yeah, Aptos, another one, right? You can say very, very curious. We looked at AVAX, we looked at ETH, we looked at Sol, we looked at Inge, we looked at Vanry. What about Say? Exact same story. Look where Say is, right? 886, right? Your external 886 at that, and you've gone a bit below it. Doesn't matter. It's the general area we're interested in. Right, so you have your X, A, B, C, D. You have your BAT. 86 for the BAT was right over there. We have this zone. This zone was literally where the cumulative structure took place in the past. Right, there's your spring back test. That's where your Wyckoff sort of price action came in, and then right now what you're doing, you're going back to the area. So you have a 4-month buy zone mid in this area. That's where you're bouncing off right now. Right, you've lost your 12-month levels. That's obvious. If you lose this level, then I think you go back towards 20 cents on Say. So that's where you'd bid basically, right? But if this level holds, and again we're getting that already, right? Where if you look at the weekly and you look at the weekly close, you take a look like this, you can see buyers are trying to step in right now at 0.2433. You can try and take scalps off these on the lower time frame if you want. This is where the new hour is started, right? So let's say you start getting 15 minutes, 1 hour, whatever time frame you're trying to trade. If these start turning to resistance, you're going to take scalps to the downside on that time frame. If it starts flipping to support, you're going to take scalps to the upside on that time frame. Right, but on the higher time frame, that's an area now where I don't care if Say chops around here a bit, as long as these candles are maintained on the higher time frame, we have a completed harmonic. Right, and this area is going to serve as a, where is it? One sec. Yeah, this one. No, not this one. Oh, I've got way too many. But yeah, so this area is going to serve as a type 2 for one of the previous harmonics. Like, go back to the harmonic setup video. I can't find it within all this. I can't be asked. But we had a completed harmonic here, right? So this could very well be a type 2 in this area, as long as this general area holds for Say on the higher time frame with a completed M shape. Again, if you wanted to buy, let's say here, don't go all in, right? You'd be trying to catch a falling knife for now if you decided to go all in over here. 30%, 40%, whatever you're happy with, and then leave the rest for bids over time, right? You guys already know 20, 40, 40, change the ratios however you want. I've explained it so many times, you guys know the entry model for that. But another one at an 886, at a completed wave structure, at higher time frame support levels, at areas where buying structure has taken place in the past, bullish structure has taken place in the past. So another one to definitely look. 2.618 to 886, right? Fib confluence in this area. 4-month buy zone confluence in this area. If you lose that, you're going to the low. So if buy step in here, that's why I'm saying spot, right? Just take sips. You don't have to gulp the entire drink down at once. Just take sips. Survive. Just survive the chop, and then I think we resume back to the upside. I don't care if this doesn't go to make new highs, right? We're just interested in getting a high RR trade-off, where we go risk-free after our allocated risk to reward, and then after that, we just sell again if market looks toppy, right? That's it. Say, and of course I'll be updated if you, whatever you guys decide to enter. If you need help with how you manage, right, how to manage your risk, you guys in this server, just send me a ping. Like I said, we'll deal with it in the chat. So let's say you decide to enter Say, you enter 30%, and then you get confused on, okay, well, how should I DCA? Just send me a DM, or just ping me in the server, and we'll get it sorted there. So, none of you are sat there wondering, okay, well, okay, I've entered now, what now, right? And I know none of you are going to be like that anyway. You guys have all finished core at the minimum, so you guys know how to manage your pause, how to take risks. But if you do need the extra help, I'm here for you guys. So, okay, that's say. Let's look at SWE. Another one on SWE 886. That's the internal XABCD, right? You can go for the external wick. You can go for this wick. For now, I'm just looking at this area. That's what the 886 is. Just go ahead and put the weeklies on. Okay, just keep putting the weeklies on. As you can see, what's happening right now is buyers are trying to defend the mid. Sellers are trying to put supply in the market. It's a tug of war. Let's see who wins. That's it, right? But this at 886, you have like a you have a fair value gap over here on the higher time frame. You have a monthly fair value gap below you now on SWE. If you wanted to drop this a bit lower, if again, don't be bearish if it goes here. That's what I'm saying. Take sips, right? This is spot territory. Okay. Of course, for leverage trades, you want to be sniper entry. Right now, I'm talking about spot because during massive dumps like this, right? Especially if you have a portfolio already and you're both a trader and an investor, spot should always be your go-to choice first, and then you think about your leverage entries, right? For spots, let's say you come back in and do retest here. Even though most people will be bearish, this is an amazing area to bid. What was on resistance being flipped to support, right? Very simple. And in spot, that is an easy enough risk management, especially if you follow what we were doing, how you follow the risk management profile of 20-40-40. As long as you apply it to this area, easy. If you lose this, you just cut. If not, you have a entry. You have a position size you entered at what could be a low, and then you build up on that, right? Otherwise, you just cut at a very, very minimal loss to yourself, right? As soon as this local buy seller zone is turned into resistance or whatever, and then you just look for your next key target. In this case, that'd be the monthly fair value gap mid, right? Down to this area. That'd be the next area you'd bid if this is lost. But SWE, another one, right? And of course, you can try and look for microwave structures as well. I think I was doing that earlier. So of course, you could come down and get an 886. You could get $2 SWE. Who knows how hard we dump here, right? If we get this though, again, this is where you bid. Very simple, right? Look, you've got 2023 12-month levels, 2024 12-month levels in this zone. Higher time frame 886s. That's your next external. You just bid if the opportunity comes. That's it, right? But that's SWE. I already have enough SWE, right? I've taken profits on my initial spot bag from the calls I gave in September of 2024. Again, harmonic setup video. The only way I'll enter here now is if we get confirmation of a low being established over here. I'm not going to ruin my average for no reason. Otherwise, I'm more than happy waiting this one out to see do we go lower or not. Right. Ondo, right, there goes the smiley face structure, right? That got completely ruined. We no longer have a smiley face, and this is what I was talking about, right? I was saying, okay, last stream we did either we get the smiley face here or that structure gets completely ruined. The structure has been ruined, so we can go ahead and get rid of this. That is no longer a key level. That's no longer a key structure. This is still a key level right over here. I'm going to leave that. That's still a key level, support resistance, but I can get rid of this box here. You're at 2024 6-month seller zone low, right? You've lost to 2024 for 12-month macro mid. So if you lose this level, I think the only thing you're looking at now is a raid, right? Against some sort of raid here. And in terms of wave structures, do I have anything already on? Yeah, we did have this potential ABCD right over here, right? So what we have here is we have a 382, right? We have a 382 right over here. This is a 397, 398, so basically the same thing. I'm gonna go for a 382. There we go. That 382. Your first target is going to be the 2.24. 2.24 has the 0.5 of the 6-month macro buy zone mid confluence. If the 2.24 doesn't hold, then you have the 2.618, which actually takes you into this zone we've got marked down, right? The massive liquidity pocket on Ondo, this one here. What is this? You could call it a monthly textbook demand zone. You have an impulse down, consolidation, impulse back up. Another key level to consider here on the monthly, hopefully you guys noticed this, is you have a buyer and a seller zone next to each other, and this is a mitigated buyer seller zone. So basically this entire area here on Ondo, you can see very, very key, right? So you have a buyer seller zone being created when you were moving down. So resistance, you broke on above. So is this now an area that where buyers are going to take control, or when we go here, is it going to be full supply? We might not get this low again, right? If this holds, we might not get that low, but in case we do, You know, you can put your monthly fair value gap level down as well. So you can go here, and I'm just going to put it down like this, right? That's your monthly fair value gap mid, so on and so forth. Loads of key levels coming up below you in Ondo. Honestly, I would just wait for some sort of bottoming structure to form on this. Don't even waste your mental energy trying to be like, where's it going to bottom? Just wait. Just wait for the higher time frame structure to present itself. Right now there isn't structure. Right, there is just massive sell-off, no bottoming, nothing. Look, the weekly, you put the weekly buyer seller zone down, right? That just created, you're chopping around the area. It's just created. Just let this breathe for a while. Right, just let it breathe. But just to let you guys know, there is extremely key levels below us on Ondo. Should we go back down towards the area, there is wave structure as well. So for example, let's try and find XAPCDs, right? So if you try and find actual harmonic patterns here now, let's take a look. We have, for example, here's a low, a shark straight off the bat. We can see that, which could take us to an 886, right? If we got that 886 on the shark, that would take us around, same area around, let's say around the 2.618, right? Around here. There we go. Nice little PRZ down over here, basically for Ondo. Should we get here, and can we make this into a bat as well? Is the question. Let's take a look. I know I said a quick stream, but I've been going on for a little bit, guys. Sorry. Let me just finish everything, and we can go. Yeah, I mean you have a bat as well. There you go, right? 2.618, 886, basically. So you know you have loads of wave structures telling you if this level is lost, right? And of course you can have a relief pump, right? Just because you bounce doesn't mean we're going to the all-time highs, right? You could have a bounce, and very well, if you go and flip this area into resistance, that's a beautiful short opportunity. Don't forget, anywhere here is a nice short opportunity should sellers take control. Okay, it could be a bounce first, that takes us lower, but we have loads of confluence now. Basically, you see shark, ABCD 2.618, and bat for why this right here on top of a monthly textbook demand zone, confluence for Ondo for lower, right? Ondo back towards 80-90 cents sort of area, right? That sort of area. So you have confluence back for that area. But for now, where we are, a 6-month seller zone low, right? That's the reason the action is being taken over here from 2024. So again, just put your weekly buy zone down on any coins you're looking at, because a weekly close just happened. Pivot anything you're going to do next week around these levels for now. And once if you buyers take an edge here, you take a long. If sellers show an edge here, you take a short. And for now, sellers seem to be showing an edge, but the zone's not lost, so the battle's still ongoing. Apart from that, we can just take a quick look at everything else. Hype, right? This is why I was warning you guys, please don't be very careful. You front round the 1.272, you straight back down. You're holding structure for now on hype, but I really want this to go to there. That just because I want it, like I said, doesn't mean we're going to get it. But hype literally fighting last week's buy zone right now. And there we go, you're tapping it here. Right. Again, if buyers take control here, this thing can easily go to the upside because buyers would be showing you the edge. If this gets lost and gets treated as resistance, then we could actually go get a raid, maybe go to $15. Who knows? I've set a limit. I'll set limits for this area if it looks like we're actually going to go there at some point. Not going to set limits right now though. That's hype, right? So we've gone over quite a few. Trump, let's take a look. Yeah, I have hopes for $15.88. What can I say? Right, that's the mid. The reason I've got this. Why have I got this? One sec. I've got new candles. I just realized. Let me reframe myself. One sec. So I know why this is. This is the daily buy seller zone together. Okay, so those two we can forget about. Those were the reasons I took shorts. That was a low time frame. This is. Yeah, but why? What time frame did I get this off? Why have I put this here? 0.5, yes, but for what? Sometimes sorry, one sec. Let me just figure out what I've done here. This must be lower time frame. 4 hours perhaps. I know what this is. That's this right here. Yeah. Let's call it a breakaway gap because that's literally what it was, right? It broke away on this move up. It's the mid of the breakaway gap. But if you've noticed, we can actually go ahead and do this now. So let me do that too. We have our weekly macro read of the buy zone right over here, right? And that means our weekly seller zone is right over here. If you can see, weekly seller zone confluence up there. But that's, nope. I think I must have, nope. Okay, never mind. Yeah, weekly seller zone confluence up there. Weekly buy zone down over here. You can do this with, again, previous candle, but for now you can just leave that on, you know, last week's close. But let's go back. 886. Yeah, the harmonics just didn't yield anything. Right, nothing was yielded from the harmonic, and it's a shame because that would have been a really nice structure area, let's say. Should buyers have stepped in there? Now what do we have here? 886, 1.13. Yeah, definitely not. Way past that. So what else can we make from here? We have .618, so 1.618 perhaps. That one's gone as well, to be honest. 1.618 would be right around there. So you're at a wave structure area, that's for sure. What about if we did this? What about then? Well, that's a 382. So if we're looking at a 382, so right now the one in play would be the 1.618, because I don't think this, yeah, I don't know about this one, boss. I'm not sure. Well, I'll leave that there just in case. Who knows with these shit coins, right? So that's one. But yeah, for now, forget about wave structure. For now, $15.88 is where I'd expect the next key level to be, just because that's the mid of the breakaway gap. Whenever this came out on Trump, I'm still running my short from $74 on this. Always good to hedge. Doge coming down into that zone we were talking about, right? We flipped this to support, great. Flip this area to support, even better, right? I'm just going to compound on Doge when we get there. And just because if you guys followed me and entered September, literally down here, we are very, very safe on our Doge entry, okay? I'm not even batting an eyelid in this dump for Doge. Even 886 would still be in the green from our September entries on Doge. So do we get an 886? Who knows? That's a 5.5, 0.5. Maybe. So for me, this is a 0.5. So if it's 0.5, we're looking at the 886. Again, I'm only putting these deep ones down in case, right? Don't take these like too seriously right now. We're gonna focus on the actual key areas right now. Doge is at that key area. I think many of you did enter with me, so even if you wanted to compound it, it's not a bad area. I'm gonna hold out for now from compounding on Doge. Right now, the only coins I'm gonna enter are ones where the risk to reward is absolutely amazing. Right now, I don't see a way to take this Doge trade without affecting my average in a way where I wouldn't be. I would wanna size up as an area where, you know, I'd feel like, okay, there's not much more room for downside in this particular area. I feel like there is a bit more room for downside on Doge. As you can see, like, you know, very, very valid to get between 16 to 19 cents here on Doge, in my opinion. So I'm gonna hold down Doge for now, but definitely in my watch list. I've been saying this with Department of Government Efficiency. You know, it's gonna be bearish until, you know, everything's bullish again. All of a sudden, you know, Doge is gonna be all over Twitter. All it takes is for one bullish thing to come out, right, and then it's just gonna propel up again. So I'm not gonna ruin my average here, basically, for Doge, not yet. PAL, another one. We're at areas where I would really want the high low to come in on PAL somewhere around here, right? We've got this hit stop loss on break even for me, by the way. I didn't update it earlier, so if you guys did enter with me, your stop loss would have hit my break even by now. Yeah, it would have. But it's okay. We caught a really nice move up on this. Right, we caught from initial entries. I think it was around here, around 18 cents if I'm remembering correctly. So just after that move up, yeah, around here. We caught 167% move up, right? Way past T1, you just about front ran the mid. So, you know, any pullback here for me is a 886, right? So I type 2, which, until proven otherwise, this is literally a type 2 return. And you know, we talk about type 2 returns all the time. Yeah, when we get it, people don't take action, right? People just ignore it and they just remain bearish. Don't remain bearish. Look for these type 2 returns. Look, we've got this zone where we have the 886 route, or just below us there is a potential 886. We're probably going to hit on pound now, right? The 786 has just been hit. So let's say we do go somewhere around this 886, right? It's going to be a type 2, right? The only way this is not going to be a valid type 2 is if we genuinely lose structure and lose that 886 and actually take out the X as well and just pre-close, in which case you wouldn't want to be in this anyway, right? But if you want to recompound, you wait until areas like this get hit. You know, you remain patient. Maybe you get a bit deeper, maybe not. If you're okay with the risk tolerance, you can start, you know, compounding here, sizing up, or re-entering in our case, because we've been stopped out now on break even, right? You either size up slowly. You guys know the laddering strategy, 20, 40, 40, and change the ratios depending on how far you are from your initial stop loss. Or you just, you know, maybe you just sit on your hands until you get as close to that level as you physically can, and then, you know, when you feel like, yeah, this is it, I don't want to be greedy anymore, pull the trigger. But if this level holds, right, all it takes is for us to go and actually flip that beer into support, and we have a harmonic, a W shape that could take us back towards D. Again, don't take this D too seriously for now, because we, of course, we need to confirm this area is still going to be support. We need to confirm B as support before we even think about this D point. But this is just me projecting what could end up happening on the long term. So you guys sort of think, okay, what could you possibly be missing out on if you don't take action at these areas, right? Because this for now just seems like a drawing until, you know, 5 months down the line, 6 months down the line, all of a sudden your D's getting hit. You're getting alerts from me saying, oh, 86 is it, take some profits, and you realize, oh shit, like, you know, I should have entered at 15 cents, right? That happens way too often. People are very, very excited here. People are doom and gloom here, and it makes sense why, but it should not be the case. This is where you just, you know, remain calm. You take profits. This is where you bid, right? So PAL, another one. But there's loads, guys. There's loads. I'm not gonna go through everything today. Like I said, it's a bit late. I don't want to keep you guys too late either. But just off the top of my head, a few others I was looking at, right? Let's take a look. There was DOT. Polkadot for you guys, you know, about to come to the 886, right? Take a look, 0.5 there, 506, right? 2.526, 0.886 here. Basically, the 2.618 and the 0.886 is going to be somewhere within this area. You can go ahead and put your 12-month buy seller zones down. For now, I'm looking at this in terms of key inflection areas, right? Very, very wide, but you do have an M shape, right? You have an 886 right over here. So this harmonic literally played out to the T, and now we're just getting a re-up of that, basically. I wouldn't call this a type 2. I don't even know whether to call this a type 2 because the entire harmonic basically played out. But we're getting a chance to re-up. So maybe you get a, you know, wick towards the liquidity pocket and then, you know, base and then go back up. Again, DOT's another one to watch. You've got NOT. I was looking at this earlier. I waited so long for this harmonic. There's just no reaction here, which is a bit disappointing. Below this, I don't see any key levels. I don't see any key levels below this, so NOT is not something you should be in right now. The only way you'd even think about trading this now is you just have to go ahead and put your weekly, you know, just put your weekly buy seller zones on, your dailies, and try to take scalps to swing mindset trades based off of the reaction you get around this. You can see even the weekly buy zone, we literally just closed, you're already losing it. So it's just massive sell pressure on this, which is a big shame because it was at areas where, you know, you could still come, right? You could do what AVAX did, for example. You doesn't have to bottom there. You could do this, but then you could then start and reclaiming this as support and putting structure in, and then eventually, like, you know, you see that, okay, that 86 has been reclaimed. Then, you know, this 86 might still be in play, but for now, there's no valid reason for you to be a NOT. Okay, but I'm watching this anyway, just in case something does happen around this 86 in the future. That's not. This ME token, let's see, this was I gave this to Ryu earlier. What's happened? Yeah, we've lost it. Look, many of these coins, absolute death, because again, below this, what you know, obvious reason is there to be in this coin now, right? In terms of wave structure, there's nothing. So yeah, it's just a success really. But ME, wouldn't be surprised if this shit went all the way back, like, you know, it went down to 70 cents even, right? Let's say it's just a valid mid from here to here. Now you could look at this on log, which is something I'm more than happy to do, right? So let's take a look at this on log. This is my scalping chart, so let's get off that and go on ME USDT. Okay, it needs to be on master list. ME USDT. I believe KuCoin's the one I look at. Aggressive selling going on, obviously. Now in terms of golden pockets on log, you are at a log golden pocket, right? So basically, 618 to 66 is 139 to 1.02 for Magic Eden token, right? And if that doesn't hold, then of course your liquidity rates are 71 to 74 cents. But obviously that's a wide. So for me, I'd literally only be wanting to play this like based strictly on levels, right? For me, even like trying to take that as a buy zone right now, no good. Only scalps off these log levels is what you'd be doing right now. No spot buys, no nothing. Because if you're buying spots here, you're trying to, you're only going to do so basically based around these singular levels. Don't treat it as a zone. Because when something's downtrending like this and there's no buying pressure whatsoever, it doesn't make sense to catch the falling knife, right? So if you're going to buy a spot, you do so as long as you're above the 618. If not, you just wait until you either get hit or until you eventually reclaim. That's it. Nothing else to worry about there. Farcoin, anything on that's on log? One sec. I mean, you've raided these, raided that, raided. Liquidity's been raided on Farcoin. Weekly buy zone here. So Farcoin's one where any buyer strength you see coming now, take it seriously, because I mean the local liquidity has been raided, right? So for now, what do you see? You see buyers defending that weekly buy zone mid. Right, so for example, if you wanted to scalp the swing mindsets on this, you look for the hourly candles, right? Hourly is more intraday anyway. I wouldn't call hourly scalping, but then again, I wouldn't recommend 3-minute entries on Farcoin either. Right? I don't know, it just seems a bit too low liquidity. You can try it if you want, right? You can try it if you want, but I feel like for longer term play, getting 1 hour entries would be more than enough. So perhaps in 1 hour's time, 8 minutes, if you get this successful close, you can start doing a spot entry around this, and you can manage your entire spot entry around this lower time frame structure, right? That way you're entering big size with spot, but doing so with very minimal risk management. Sorry, a very minimal loss to yourself because of your risk management, because of where you are. Like, for example, if you lose that 0.5 and it turns to resistance, doesn't matter how much you put into spot, you just get out of it. You get out of it. Right, because as long as this is resistance, you're saying an area where buyers were active last week, sellers are trying to take control now. That's not something you want to be long into, right? But Farcoin, as long as this holds a support, don't get it twisted. You could very well have a relief pump back towards, for example, $1.11. If the bottom's not in, if the bottom's already in, this could take you back up towards $1.30 and new highs. But I'm not here to call bottoms, right? Just manage your risk. That's all I'm here to say. Manage your risk around these areas. You have very, very nice areas for Farcoin, basically. Very, very nice. You literally have a demand zone right over here, which basically a monthly buyer-seller zone together. If you lose this particular area where you currently are, then basically you're going to be managing a risk somewhere around these levels, right? That's it on Farcoin. But only talk about these if you lose this, of course. So just set some alerts. If you can't be asked, just wait for the high time frame to go and reclaim some of these levels, perhaps, right? The 2024 12-month sellers on low, for example, if you want to play a bit safer. In terms of risk to reward, this is where you take the risk, right? Based on structure and based on what the buyers and sellers are doing. MKR waited so long for this, right? We have a monthly fair value gap. We have a ABCD 0.5, 2.0. We have all of this happening around 17, 18, and 2023 12-month levels. We have a 886 in this particular area, right? A bit deeper for the 886, but we're at those areas nonetheless now, right? And if you do get that one more drive down, right? If you get that 1.13, we could have a potential shock to take us back up in the future towards 4Ks. So MKR is the areas I've waited absolutely ages for this. Even if you guys watched my September harmonic setup video, this was a harmonic I was saying is uncompleted, right? We were waiting for this. Same with Rune. And it's finally here, right? We're finally completing these, and there's probably you can probably find harmonics like locally as well, but I'm just gonna go off these macro ones. MKR is at an area where you can easily manage your risk, very, very easily. Okay, 20, 40, 40 this. What's your invalidation? Look, if you start closing below the 2.618, you have no reason to be in this trade. Very, very simple, right? But you're at the area monthly fair value gap, right? You're at the top of the monthly fair value gap. 12-month buyer seller zones again, harmonic confluence. What more could you ask for, right? Wave structure wise, this is it. Even better now, if let's say we do get one more drive down, and by the time the bottoms down we go up, if we can pair that with weekly bullish divergence, this would be chef's kiss. This would be absolutely beautiful. MKR Metis was another one I was looking at. It's approaching key areas, but I just don't know if there's any signs of life in this. I don't know what this is doing as a project. I think they have a revamping going on. I think they're going to rebrand. I forgot what they're going to rebrand into. But again, in terms of TA, You want to manage your risk, you have no better area than this to do so. Right, that's it. Das Metis, DYDX, let's take a look at you. Back down towards literally the lows right here. You've raided the lows on DYDX. Absolutely crazy. Here. So again, if you see buys reclaim 0.5, it could be hourly candles, can be 4 hours, depends on what time frame you're interested in. I'd say, at least for spot, if you're not gonna buy here, where else are you gonna buy? Right, you don't need full exposure here. Just because you have the lows doesn't mean you need to one clip this. You can literally enter with 25%, leave 75% for sizing up before this thing goes parabolic, right? Because you'll have structure telling you, okay, you're gonna buy seem to be showing sort of like this. Right? You see buys showing signs of life. That's where you slowly average up on. You don't go all in here, right? That's very much a gambling approach. But you know, buys reclaim that 0.5 again. I see no reason why you can't sip this on spot. Rune, now we look to this, right? We had the 3-month fair value gap completely lost, right? You hit your 2022 and 2021 12-month macro read buyer / seller zone lows. SFP'd there. So again, if you wanted to swing this, high risk trade would be this. Right, something like this basically for Rune. But again, you don't have to go all in right over here. Right, you don't have to go all in right over there. What you are doing, however, is you're looking at, okay, well, how many key areas did we have? We had the shark, bad. We had a load. We slipped through all of it. Sorry. So I think the best option for you is actually to put this down, your weekly buy seller zone. If you get a tap towards that again, $1.13 level, and buy show signs of strength, I'd get in there. Otherwise, if you flip $1.336 into support, then you can look for lower time frame entries to try and take this back to us, perhaps a rejection from this 3-month FVG. So any trades right now, your goal is to see what kind of reaction do you get once you get to the 3-month fair value gap. Do you claim it as support again, or do you go and start SFPing the mid, so on and so forth? But the main confluence here is, of course, if you look at log, we know Rune has hit its macro golden pocket. 61866 on log, right? Very, very confluential. 61866 on log has been tapped. This is where you bottomed out before. And on top of that, you also front ran the 764786 of the trend base extension, right? From high, low, lower high. One more drive down, of course, I'd welcome it. Hit the liquidity rate of the golden pocket, stop out anyone that was long over here, get a deeper pullback into this, hit the deep value 87886s, and then go perhaps, right? Get one more tap of this breakout from the supply line / demand line. But do we get it? We'll have to see, right? We might get a relief pump before we get this, or this might literally be the bottom. Who knows? But all I know is that, again, if you wanted to manage your risk, as long as you're doing so around these levels here based off last week's weekly close and these higher time frame 12-month levels, it's very, very easy to manage your entry and your stop loss, right? ARB could very well put in a shark here. We need a 1.13 minimum. The 1.13 would take us to 31 cents. Nah, I don't know if that's gonna happen, but let's hide this one for now. Actually, we're just gonna have to see. That gave us 119% move up. This ARB hit stop loss and break even for me. We took initial plus some out here, and now it's just, you know, the rest right back over here. So looking to just re-enter with whatever I've got on this at some point. Not right now though. You can put 12-month buy seller zones on, by the way. I haven't done that yet, but you can definitely do that. But yeah, there's loads of other coins. Okay, guys, I'm just literally looking at a few. I'm literally only looking at a few. GMX, another one, right? The 886 of the shark, right over here. For now, we've gone below the 886, but I had this box drawn on as, okay, here's your accumulation. If you decided to manipulate, this is the only area you can do so, right? So I'm just gonna watch what happens here. This hits stop loss or break even for now. I'm just going to wait, either wait for the reclaim of this or wait for some sort of significant liquidity to get rated a bit lower. OP, let's take a look. Yeah, this one wouldn't have played out. Good thing we didn't take that one. So nothing to be done on OP right now. I'm not interested in this until we recapture at least where those harmonics were lining up. So, but again, you add 2024 key levels, 2024 12-month buy zone low, right? You add that area. So as long as you're above this, you have a reason to be in this now, because buyers have defended technically area they needed to so far. You can put your weekly buy seller zones down just like that again. If you can see, you know, this area between the low and this being support, for example, you can get in. Same, literally same. It's rinse and repeat for every single coin right now. Right, literally every single coin, rinse and repeat. Put the week that just closed. Put your weekly buy seller zones down. In this case, buyer zones for everything, right? And then pivot your actions around that. If buyers show an edge at your buyer zones, then you take the longs. If sellers show an edge, you take the shorts, right? That's it. But yeah, there's a few I'm looking at. There's way more, I'm sure. There's pretty much any alts you look at right now probably going to be destroyed. Many probably going to be sat at areas you want to slurp some again. So I'll have to spacebar when I have time, like I said. But just wanted to do a quick update to just out, because just in case, you know, some of you were panicking, some of you were a bit worried. Look at Bitcoin in the way I told you to, for a different perspective. I look at it with diagonals in mind as well before you fully decide. Okay, has the market topped out or not? Put the structure in mind, and it's just my opinion. Could I be wrong? Of course. Right? I'm just giving you my opinion. That's it. But you know, for now, these are areas for me where, as investors or as traders, you should probably be excited, especially with altcoins. Probably be excited that you're getting these entries again, right? Because again, I don't think the market tops in. That's just my thesis. I don't think the market tops in. But that's gonna be it for me today, guys. Just wanted to do a quick one. I know that was a bit longer than I probably thought it would be, but hopefully that was a bit helpful. Yeah, no problem at all, brother. No problem at all. BTC dominance. Okay, let's look at that real quick. Master list. BTC dominance and USDT dominance. USDT dominance, you can see still chopping in between the areas we were talking about. So like I said, nothing significant is going to happen either until this happens or until this happens, right? That's your bullish scenario. That's your bearish scenario. Right now, we're just chopping in between your line of best fit and your range extreme. That's it, right? So we talked about this last video as well. Nothing's changed yet. What was the other one? You said Bitcoin dominance. Bitcoin dominance looks absolutely bullish. For now I'd be eyeing this, right? I'd be eyeing this potential butterfly to come into play. So we have this 769. It's not 786, but it's close enough, right? 1.272 basically, somewhere around here. 63% is the next target I'd be eyeing if you get above 62 and 62.51. Yeah, no problem, guys. Sorry about the late one, but I'll do a stream again sometime next week. Like I said, I'll do regular ones after I'm back like properly midway through next week. So from next week on, I'll probably resort to doing daily whenever I can, at least every other day, even if I can't do daily right now. But yeah, hopefully you guys are excited, because I definitely am. Right, this is why gave all my calls in September, did a re-up around late October when we got other harmonic setups complete. After that, I've not gave any other calls, right? Because you don't, after you enter, that's it, you enter. You just wait for everything else to play out now, and you wait for the trade to come to you. That's what I was waiting for. And now the trades are coming to us again. So now at areas where we slurp, we take risks, and that's it. But guys, I'm going to stop the recording here. Thank you for your time, right? It was a bit hour and a half long. Sorry about the length, late hour. But I'll put this on YouTube for you guys, and I'll see you soon. Yeah, bye bye.